So I'm just going to make a really quick and simple video just talking about investment. There are a lot of new investors over the last 3 years, mostly because during COVID pandemics, people were locked up in their house. They couldn't go to casinos. They couldn't spend their money on the stuff they normally would spend their money on and whatnot. So a lot of people opened up trading accounts for the first time. Some people opened them up in Robinhood. Some people opened them up with Coinbase. Either one, they were trading cryptocurrency. Some people did all of these other wallets that jumped up to trade altcoins like Webull and Shield Wallet and this, that, and other. There's a never-ending list of these things, but the reality is, when you want to trade stocks, you definitely want to deal with the big boys who you can actually trust to manage your portfolio, to give you constant 24/7 access to your portfolio. Also, and I think Robinhood actually exposed this, the simple fact is a lot of these trading platforms have bad execution. So it's possible for you to be on a trading platform like Robinhood, and when you want to trade, you may or may not be able to trade because they may lock you out of trading, or their systems may be so slow that their systems crash and they're constantly down. And there's a thousand reasons why certain trading platforms aren't good trading platforms. Now, I originally started years ago when I was around 18, and I was trading on Scottrade. Scottrade was purchased later on by TD Ameritrade. TD Ameritrade was purchased by Charles Schwab. So TD Ameritrade still exists. Scottrade doesn't. Charles Schwab also has brokerage accounts that you can get. So just to start from the very beginning, the question of the day is, well, where should I be putting my money if I'm trying to increase the value of whatever money that I want to invest over the next 10 years? And I recommend personally, which the ones I use, E-Trade, Charles Schwab, and TD Ameritrade. E-Trade, I used to use that one to trade biopharma, and then I kind of stopped trading biopharma, and then I used E-Trade to basically trade airline stocks. TD Ameritrade, I think I did mostly oil stocks and tech stocks. And then Charles Schwab, I basically created my own index, which I'll tell you about in a minute, called Mangoat. Because I'm assuming you're new here, because I have like a lot of new subscribers. So basically, this video is like, I guess you could say it's an introduction to how I run my portfolio. Everybody invests differently. Some people invest in video game companies. Some people invest in cruise lines. Some people invest in airlines. Everybody has a different philosophy, and that's a good thing. It's always good to invest in what you know. If you're the type of person who likes clothing and likes fashion, most of those people will invest in fashion and clothing makers. There's nothing wrong with that. You invest in what you know. I just happen to know aviation, electronics, and travel, and basically commodities. So those are what I like to trade. TD Ameritrade, right, as you can see, they offer training sessions. They also have videos on their app that teach you about how to trade options, and they also teach you how to trade ETFs. They teach you how to trade mutual funds. And there's a wealth of information that's actually right on their website or built into their app that you can have access to. And that's a really good thing. So if you don't know anything about trading, they can teach you from the ground up how to trade. And that's one reason I love TD Ameritrade, because if I have friends who come to me with questions and I answer the question but they don't completely understand it, I can always show them the visual information. Like, some of these people are visual learners. TD Ameritrade is really good for that. I also have Charles Schwab. You can open a Charles Schwab brokerage account, whether you want a joint brokerage account or whether you want an individual. You can open it right away. You can open up Roth IRAs, traditional IRAs, where you put money aside. It's tax deferred until much later in your life. Automated and managed portfolios, you can get them to manage your portfolios. See, what I really wish is that, and I'll tell you this would actually be really good for the crypto traders, because there's a lot of people who don't want stocks anymore and they just want cryptocurrency for whatever reason, because they've bought into the rumors and all the conjecture about these crypto millionaires and billionaires who buy in the beginning, and then all of a sudden they're buying Lamborghinis and stuff. But the reality is, if they had an automated system that could automatically buy and sell for you. Theoretically, it should be possible if you had a really good artificial intelligence. It should be possible for you to put $100,000 in and flip $100,000 into $1,000,000. What that would take is a computer that can buy and sell every single dip reliably without losing much money. I mean, it's impossible not to lose, but that would be really amazing if they could do that. But right now, that doesn't exist. There is no foolproof system. People day trade these coins and these cryptos. And what scares me more than anything with cryptocurrency over stocks is that cryptocurrency, in many cases, is not held accountable to the exact same laws that cash money is. So that's one of the reasons why the SEC and the IRS are trying to rewrite the laws right now, because they know that if there is a digital currency future, that's a highly speculative, because right now we actually already had a digital currency. We have credit cards. We have debit cards. We have the ability to trade from our cell phones. We have the ability to pay for things from our cell phones, from our watches, from our wearable technology. We already have digital currency. So all of these cryptos, and at this point there's almost 20,000 different cryptos. Bitcoin accounts for more than 45% of the value of all crypto for the most part, depending upon what day it is, because also the market is extremely volatile, so it goes up and down very quickly. But the reality is, the thing that worried me more than anything about crypto is the fact that there's no insurance, there's no liability, it's not held to the exact same standards that cash money is. If you go to a bank, you're insured for $250,000, regardless what they pay you in interest. There is no insurance for cryptocurrency, and that's just a fact. When you put money in the stock market, if you're buying dividend-paying stocks, you're getting dividends back regularly. There is no dividend on cryptocurrency. Now, there are some companies that try to mimic dividends, but the reality is, if you look at the very definition of a dividend, dividends come from the profits that are shared back to the investors. There is no profit on crypto because it's not a company and it's not making a product. It's just a token. A token is something that somebody has to give value to. Like, for instance, if you hold up a nickel, you know it's worth 5 cents. 5 cents is 5 pennies. If you hold up a quarter, you know it's worth 25 cents. If you hold up a dime, it's worth 10 cents. If you hold up a silver dollar, you know what that's worth. It's worth $1. The reality is, crypto is a token. It's worth whatever they say it's worth on a daily basis, and its value is pegged to the local currency, i.e. the US dollar. So enough of that. I'm going to move through this very quickly. If you don't have an account, you can open up one very quickly with TD Ameritrade or Charles Schwab. Now, what should you be considering trading? As I said, I have my own index fund. So basically, I call it ManGoat. And that stands for Microsoft, Apple, Nvidia, Google, oil stocks in general, AMD, Tesla, and Amazon. So the problem is I'd almost have to put another A in there. But bottom line is I call it ManGoat, and the A can have double meanings. So you figure that out yourself. You also notice that there's Google Class A and there's also Google Class B here. Now, I told people about the Google and the Amazon stocks as soon as I heard about them. Amazon has quickly gone from the $2,900 that I talked about it at and mentioned it, and it's gone from $2,900 to $3,200. Even with the Russia invasion of Ukraine, Amazon only went down to about $2,671, and it quickly regained that money, and now it's at $3,225. Same thing goes for Google. In a very short period of time, Google was at $3,042 and $3,030. It dropped down to $1,996 and 2010, and right now it's back up $700, $722, $736. So anyway, as you can see, it's very possible that the reason why they're doing their stock splits, just like I mentioned about Tesla, was so that they can get included in indexes which they otherwise wouldn't be able to get included in. But I told people to buy the Apple stock split, the Nvidia stock split, and the Tesla stock split. Now, I don't know if Microsoft may do a stock split. I don't think they have to, because their value is low enough where they're already on the indexes they want to be. But bottom line is, we have no idea what could happen. Now, Microsoft and most of these other companies here, they've had very strong earnings. So I don't foresee them doing anything else beyond this year. This right now is the time that you should be getting into Amazon and Google if you haven't gotten into them. I guarantee you 10 years down the road, Google especially, you know what they make. They make virtual reality gear. They make phones. They make all types of technology. They've got their own internet service. Google is a global multinational, and you'd be a fool not to get in if you can get in. But you have up until July. I recommended buying it immediately. So people who might have criticized me, they'll be like, ah, yeah, well, it went down when Russia invaded Ukraine. Well, that was unforeseeable, but the bottom line is it's still going back up. And within this year, you will see it go back up. Amazon shot up as soon as the Federal Reserve increased the interest rate to 0.25. By the end of this year, I know Amazon's going to basically keep going up. The only difference is it won't be this number. It'll be this number divided by 20, and then whatever gains are made on the split stock. It'll be easier for regular people to buy, but my thing is, if you wanted to make your gains, you should have already bought it because you would have already seen gains. I told you to buy in at 2,900. That means that right now, if you had bought in the moment I told you, you're up over $200 right now. So if you sold it, you're walking away with a $200 profit. As far as I'm concerned, I buy and I hold. I've got a 10-year play on my money that I put in the market. I'm not a fickle day trader. I don't do that. Dividend earning stocks, one thing people need to understand is the banks are paying you virtually nothing for interest. So dividend paying stocks can be very good. If you can buy enough shares of a stock and you get the dividend per share every time they pay a dividend yield, the yield percentage are much higher than what the bank is paying you for interest. 0.06% on NVIDIA, for example. That's more than a bank. Banks are typically paying 0.05. But that's a small number right there. When you get to the higher numbers, specifically the oil companies, you're getting like 8%. Sunoco has been as high as 10%. It depends what you're buying, but it also depends on your investing, what you want to invest in. It's like some people want to invest in one thing, some people want to invest in another. It's up to you. But these are my dividend stocks. So you have things AT&T, Sunoco, Gilead Sciences, Verizon, BP, Exxon, Valero. Bank stocks specifically, Investors Bancorp, Bank of America, Capital One, JP Morgan Chase. And one thing you got to understand is regardless what the price of these stocks is, if you believe in the company and you want to invest in the company, you can always invest in the company, especially if it's paying dividends, and you can take the possibility that it will appreciate over the next couple of years. Or you could think that maybe, it might not appreciate that much, so I'll just buy something cheaper. Either way, you're tucking your money away. You have access to this money. If you ever want to sell those stocks, you can. So if you suddenly find yourself needing money and you can't get it anywhere else, you could always sell some of those stocks and you could walk away with some cash. Keep in mind, though, you do have to pay the IRS their taxes, their due taxes. Now, I'm not going to make this very long. I've got about 7 minutes left to 20 minutes, so I'm almost done with this. One thing you want to be very careful of is when you hear of a lot of hype, such as the Reddit short squeeze, you can look that up online and find out all about that if you didn't hear about it before. GameStop, AMC, and all these companies that were virtually worthless, but someone decided to run a pump and dump scheme on them. You're going to want to avoid those things. It's always best to avoid those things. I avoid them like the plague. The only reason why I made this list was so I could look back and poke fun at these people when they lost all of their money after I told them not to put their money into these things. So at this point, you see these gigantic highs that were caused by people rushing in and forcing money into a system that didn't deserve it. And now those highs have basically been met with the current price, the reality that these companies were worthless. So now they're back. Most of them have lost a lot of money. And the sad thing is, a lot of that money that was invested was welfare checks sent by the federal government, not only by President Trump, but by President Biden as well over the coronavirus pandemic. I didn't get any of that money because I made too much money. If you made more than $90,000, chances were you weren't getting any COVID relief at all. I happened to make more than $200,000, so I doubly wasn't going to get anything. How unfortunate for me. Weed, I originally bought weed stocks marijuana stocks, marijuana companies. I bought them before the Biden administration. As soon as the Biden and Kamala Harris administration got in, everybody pretty much knew marijuana was going to be legalized in many, many places. Marijuana legalization causes these numbers to tick up, and they're mostly penny stocks at this point. There was a huge run on marijuana stocks where I sold a bunch of them and I made myself considerable profit. I don't really believe in this point about investing in marijuana much anymore, because at this point, the more legal it gets, the problem is it's like there's less profitability in it. It was actually more profitable when it was less legal. But some people may choose to invest them. At this point, you're getting them pretty much at the bottom, so that's up to you. I'm not going after those anymore. Chinese companies making electric vehicles are worth watching. Li, XPEV, NIO, Candy. I invested money into these things, and I'm holding on to all of my investments. Alibaba, a lot of these bigwigs think that Alibaba is going to make a return to greatness. I believe Alibaba's high was like $350 over the last like 5 or 6 years. But because of the Chinese scandal with Evergrande and whatnot, a lot of Chinese companies fell down. But the reality is China is a huge market. Their vehicles are going to be sold in China, India, and most of Southeast Asia. So I am holding long term, buying these stocks at the lowest prices and just letting them tick up over time. Because you got to remember, I have a 10-year plan. This is not about quick money. People who want quick money and want to gamble, it's like I'm not the guy to listen to. I'll just be the first to admit it. As far as tech stocks go, the tech stock industry is incredible. Microsoft, Nvidia, Facebook, Apple. Now, I hate Facebook. I hate Zuckerberg. The reality was, if you had bought in when it was $189, then you're definitely up to $216. My thing is, I don't like Facebook. I hope that company it goes under. I really do. I think Facebook has caused so much damage to society. At this point, they deserve to burn. Um, who else? Zoom was one of those stay-at-home COVID stocks. AMD is still worth investing in. I was telling people to get AMD and Logitech back at $50, and they had huge booms, 164, 140. But they fell a little. But AMD is still moving ahead because AMD and Intel make processors, and we need these processors. We need these computer chips. AMD and Intel are big money. You can't shake a stick at them. AMD doesn't pay a dividend. Intel does. Nvidia is also big for semiconductors. They make video cards and they make graphics computers and whatnot. Those guys are very powerful. And then there's the oil companies. I've talked about this ad nauseum. There were stocks in oil that when oil went negative in March 2020, I put $100, $200, $300 into some of these stocks, and I pulled out thousands of dollars. And I have to say, you're feeling it right now. You're paying $5 a gallon of gas while Russia's invading Ukraine. So you pretty much understand what I'm talking about. I've gone about this ad nauseum, so I'm not even going to talk about it now. But banks and oil are the best places to put your money for long-term storage, for long-term gains and accumulation. You pick the biggest banks, JP Morgan, Chase, Capital One. These are really good places to have your money. Banks and oil, specifically banks and oil. So the only other thing I've kind of mentioned before, airlines. Right now the airlines are down. There is no travel to Europe most parts because obviously Europe's under siege right now. So when the airlines do come roaring back, the companies that make parts, Boeing, Airbus, the airlines that fly you from, wherever you are to wherever else, you can invest in your favorite airline if that's what you want to do. Right now, the stocks are still low. So, if you're willing to wait until peacetime and until travel resumes, airlines, cruise lines, that's a good place to invest. But me personally, I pretty much stick with banks and oil because I can see the movements much more rapidly. Banks, oil, and tech stocks. So basically, that's all I wanted to add because I just wanted to post one more video. I posted one video right now. It's coming up in Apocalypse Driving. And that's all I wanted to add. So if you have specific questions, all you got to do is ask them, and I'll do my best to answer them as best as I possibly can.